Hey you guys, I've got an awesome video for you today. I think you're really going to love it. I get asked all the time what the best altcoins to buy, which ones are the best ones to hold, which ones are the best ones to make 10x gains. And honestly, I can't help you with all of that, okay? It's best for you to do your own research, find projects that you like personally, all right? And I also can't answer those questions for you because I don't know your capital allotment, how much you're willing to risk, how much you have available, how much you're putting in, and things like that. Like, that's for you to decide. But what I can do is show you what I look for in altcoins if I'm going to buy and hold during a bullish market, altcoins that I maybe feel more comfortable holding versus altcoins that I wouldn't feel comfortable holding, okay? And I'm not going to go through specific examples per se of like altcoins that I want to buy, but more so just what I look for on a chart from a technical aspect and then from a fundamental aspect. All right, so let's get into it. All right, so you see here we have Uniswap chart. Okay, this is one that I started investing in at around 350 and I sold up around above $6, okay? And what I see here is I see this really nice uptrend, okay? A nice uptrend, and then obviously we have a downtrend now. And if you're just trying to buy these downtrends, all right, you're just slowly bleeding away and it could keep going lower and lower and lower. You don't have any confirmation on a chart. You have no idea where the bottom is. You're just trying to guess a bottom. And if you're trying to guess bottoms, you're going to guess wrong more often than not. So instead of trying to catch a bottom, all right, let's try to catch things as they move out and away. And doing this, you're actually going to get quicker gains. So the easiest, safest way to do this is to find coins that are in reaccumulation. It's important to understand market structure for these types of things. Okay, so let's go look at Wyckoff accumulation. Now, it's not always going to be the same, but this gives you a good idea of how a market may bottom. It can happen with or without a spring. Sometimes it'll come up here, but basically you want to find this SOS and be able to get in before jump the creek. This is jump the creek up here, and this is where you see our huge gains before markup, and you continue up even higher. I encourage you all to go research more about Wyckoff and learn more about it. I find it very helpful for overall high time frame market structure. But anyway, it's impossible to catch the spring. All right, it's more safe to get in up here or potentially catch a test. If you're trying to guess a spring, you're going to get caught up in these areas a lot of times or in these areas, and you're going to drop lower. Wait for confirmation. It's much safer. And over time, you're going to see a lot better gains because you're not going to be taking as many losses. All right. So after a Wyckoff accumulation bottom, you're going to have a reaccumulation. All right. And so this is when it comes out of that range. And you see here, you've got your reaccumulation and price is more likely making higher lows, going in a nice steady uptrend and consolidating. And then after this reaccumulation phase, you're going to have a huge breakout and you're going to see quick, rapid gains. And that's where you want to be getting in, is either on a breakout of this reaccumulation or towards the end of it. Obviously, you can be reaccumulating this whole time. It's totally up to your personal strategy. For me personally, I find it much easier and less stressful to just get in on the first breakout of these by the dip, and then it's usually off to the races rather quickly. So you're getting quicker gains, less stressful. You're not worrying about it bouncing around for too long. You're not worrying about, sometimes you get this extra little whipsaw down before it goes up. And I might have an example to show you on here. So anyway, what you see here is nice uptrend, and then now we're downtrending basically in the near term. We're still in an overall uptrend, but near term we're downtrending, and I'm just sitting on my hands here. All right, so now I see this uptrend, and this is where I take note. And I'm watching, and I'm just looking at this structure, okay? First off, I just noticed lower lows, okay? So we've broken up out of this downtrend, out of this local downtrend, and now we've got a nice uptrend. I'd prefer more volume, but it's not terrible volume. And if you look locally, it is the highest volume on this initial breakout. Okay. But first off, I see lower lows, lower lows, lower lows, but then I finally see a higher low here. And then I see a higher high. And then the market takes notice and you see what happens here. Basically, this horizontal resistance, you can see here, we closed above it, we retest, and we're off to the races, and it's pretty simple buy. And this is where I actually did add to my position. So what I did here is I started accumulating based on this higher low, and you can see it was relatively quick profit already. And then upon this breakout with increasing volume, I added to my position and it was quick gains from there. After a reaccumulation phase like this, you would expect a nice breakout. Okay. Some nice continuation. This was a month or two, a couple of months of reaccumulation. You don't expect it to fizzle out in 1 week. All right, so that's kind of the first thing I look for from a TA perspective, is not trying to knife catch these things. All right, and then if you look at the Bitcoin pairing to give you even more confirmation here, you can see that this one started breaking out as well. All right, nice volume now. We finally got a higher low. So the main takeaway is from a TA perspective, you guys, is these higher lows are going to be your best friend. Trying to catch these series of lower lows, they're not going to do much for you in the long term other than get you stopped out continuously until you finally catch the bottom. And by that point, you've already taken 20 or 30 or however many % losses. So wait for more confirmation, start to understand market structure from a TA perspective, and then you'll find your success increase from there. On a fundamental analysis perspective, an FA perspective, Uniswap. Relatively new coin, all right? It doesn't have much chart history above, so there's not very many resistances above. If you look at something like a ZRX, we see here ZRX has a lot of history above. So whenever it gets up here, it's got all these resistances to fight through from all these people that bought bags years ago looking to break even, and it's struggling and struggling and struggling. Whereas something like DOT, you can see here exactly what this did is it had an uptrend, broke out with nice volume, reaccumulated, continued to break out, and there's not much resistance here to be had. Lack of resistance, lack of people to sell means that everyone's in profit. From this point here, every person that has bought DOT is in profit, right? So you have nobody to panic sell and price can continue to go up. Now, obviously, you're always going to have panic sellers and Bitcoin can drop and make other coins drop and things. But you see here, we dropped and it was instantly recovered because, again, everyone was waiting to buy the dip on this coin, because there was no resistance. So again, with Uni, pretty similar story. There's not much resistance to be had here. All right, it's pretty much open air above. So we should expect continuation on this one. From another perspective of FA, Uniswap is becoming pretty big for DeFi projects, right? A lot of people get on Uniswap. I believe I heard that there was around $200 billion going on Uniswap. So I don't know, somebody can confirm or deny that, but that's just what I had heard in brief conversation. So Uniswap's kind of a big deal anyway, right? And it's available on Coinbase. It's got good FA. There's actually version 3 supposed to be coming out sometime soon. So that's another good FA piece, because you would assume, especially in a bull market, if they announce that V3 will be releasing in a week, or if they announce it's going live or whatever, this should get a nice extra pump from that and a nice boost from that. Another thing you can look at from the FA point of view is partnerships and things. So just if I look at OXT, all right, we are excited to share details about our new collaboration with Chainlink. Cool. So Orchid is partnered with Chainlink. All right. So let me take a look at Orchid. And the reason I like good FA is Chainlink's been a very strong coin. All right. If other tokens are partnering with it, it makes me feel confident to say OXT is not going to fall off a cliff anytime soon. They've got strong partnerships. I assume they're continuing to build more in the background. If Chainlink and them are partnering together, they are very likely a strong product and something that's not just going to collapse right away. Whereas something like Prodium was some random ass coin back in 2017. I don't even know what they did. It was some vegetarian thing, and they raised millions and millions of dollars and took all the money, changed their website to say penis on it, and left. Okay. They had no partnerships. They had no real product. It was just a vision and a dream, and they exit scammed on everyone. They had no company history, nothing. All right. Projects like OXT that have been around for a while, they're starting to build partnerships in the space. They're building products. All right. Something like BAT. All right. BAT has a browser. They have Brave browser. Is BAT going anywhere anytime soon in the crypto space? No, likely not, unless some major hack or whatever would happen with their browser. But it's been around for years now, and they've got a ton of users. It's reliable. It's got some great features on it. Why would it go anywhere? So would I feel comfortable blindly buying BAT anywhere on this chart at the moment, or, over the last 6 months to a year? Sure. This is one that I could feel comfortable buying over the last year and just holding or accumulating, and knowing that at some point it's likely going to continue upwards because of its established product in the space and its longevity. All right. Whereas something that's much newer, not very many partnerships, maybe they don't share their team, or maybe they're very private, and they're just trying to fundraise money and exit scam on us. Next, you can always look at market cap as well. So let's take BAT and OXT since we just talked about them. And BAT has a market cap of 420,000, but its token is only 28 cents. All right. So it would take another $420 million to get BAT's price to double 28, which is 56. And for me to make a 2x on my investment. So if I put in $100 on BAT, I need BAT to go to 56 cents to make another $100 and have my account at $200. All right. If I invest in OXT, it's at 30 cents right now with a smaller market cap, but I only need $100 million to inject into this, $112 million to inject into this to double my investment. So if I put $100 in here at 30 cents, I get $100 million in here, and now I'm at 60 cents and I've doubled my investment. Whereas BAT, I need 4 times as much market cap injected into it. I need 4 times as much money coming into it to make the same amount of returns. Now, that's not a foolproof plan, obviously. BAT's a bigger token. They've got more eyes. They've got more users, et cetera, et cetera. They've been around longer. So there is more reason for there to be a higher market cap on BAT. All right. But at the same time, when the market starts pumping or when the FOMO from retail sets in and they're all hopping on Coinbase and looking for cheap coins, they're going to see that OXT is cheap, right? It takes very little bit of FOMO money in here to prop this price up and increase the value of this asset. All right, you guys. But that's basically it, you guys. That's what I look for from a TA and FA standpoint. I really like the TA side. The charts don't usually lie, and they're backed up by FA more times than not. But if you guys use this strategy, it takes a lot of emotions out of things. It will help you just zoom out and see a clearer picture and not panic sell every 5% dip. Always leave extra funds, on the sideline, $2 cost average if you're trying to ladder into a position, and always have profit targets in mind because you never know when it'll pull back. You never know if you'll get some bad FA or something negative will happen and it'll drop, or maybe there's just a black swan in the market. Okay. No matter how far away from your entry you are, always have that plan in place. And if you are taking profit, it helps alleviate emotions. Let's say, I'm in uni and I'm up 50%, and then all of a sudden it drops like 30% or 40% overnight, basically, right? In a few days, it dropped pretty quick, and this was a big day here. If I took some profit up here, and I'm maybe not going to be as likely to panic sell this or have emotions get in place. If I took 50% profit here, my account's not going to drop as much here. I'm still up in profit from my entry. Who knows? Maybe I took that 50% profit. Instead of panicking, I'm saying, oh, this is a sweet opportunity to add half of that back or add it all back and then compound my profits here because I don't think this trend is done, or because, it held a high time frame support here. So anyway, you guys, I really hope you enjoyed this video. If you did, please subscribe to my YouTube. I appreciate retweets on Twitter, and stay tuned for more content. Cheers.